Hi, we're back again. It's the last week of January in 2022. So we made it through 1 month of multiple offers, very low inventory, buyers climbing over buyers to get the house, sellers not knowing if it's the time on the market to put their house on yet. I just want to answer all those questions. If you're thinking of selling, sell your house. We'll get a longer time for you to get out, and we'll find you a new house. And if you have your home sold, you have a good chance of winning the multiple offer homes. So the inventory about replaces itself every week right now, 300 to 400 homes. We're slightly rising on the homes, but the prices have probably gone up at least 10% this month. So we're looking for quick sales and buyers to really find the house that they love and make an offer on it. We're here with Krista with Guaranteed Rate today, and she's going to go over a lot of the different scenarios for getting a loan and tell you a little bit more about Guaranteed Rate. Here you go, Krista.
Hi, everybody. I'm Krista Valpreda with Guaranteed Rate Affinity. Happy to be here today. Wanted to talk a little bit about the difference between a mortgage bank and a mortgage broker. So you have options when you're looking to buy a house. Most people will go down to whoever they do their banking with, and they either qualify for a loan or they don't qualify for a loan, or maybe they have some struggles fitting inside the box. So when you're working with a bank, you've got a couple of different loan programs, very similar guidelines to those loan programs, and not a whole lot that fits outside the box. One of the benefits of working for a company that is also a broker, which Guaranteed Rate Affinity is also a broker, is that you have access to several different investors. So in our case, we have over 20 different investors. Sometimes they are vastly outside the box. Sometimes they have something that's unique for self-employed customers, no income verification, different types of loans that you wouldn't typically find with a bank environment. So one of the most important things that I often tell my buyers to start off with is to get pre-approved. It's very important for you to know exactly what you qualify for. So inevitably what will happen is you'll go into an open house, you'll see this gorgeous home that's your dream house, and then you'll go and start the process of getting approved for that property. The problem with that is there may be issues in qualifying for it. So we like to say the best thing to do is to get yourself pre-approved so you're ready, you know what your max price point is. The other thing that's important to look for is your pre-approval that you may have done a couple of months back with your bank may not be a valid approval anymore. Even though your credit report typically hasn't expired, interest rates have gone up. So if your mortgage person you spoke with gave you a pre-approval at a certain price point, that may have been based on interest rates that are no longer available. So you want to make sure that you're revisiting your pre-approvals, you're taking a look at what interest rates are and what your max price point is based on those interest rates. There's lots of different loans that are available. The misconception that you need to have 20% down when you're purchasing a house isn't the case anymore. There's lots of loan programs that are as unique as the buyers are. And what I mean by that is if you're a first-time home buyer and you really don't have a whole lot of money, or maybe you just have your 401k that you've saved, and been contributing to, but you don't have a whole lot in the way of down payment funds, there are loans available for you. We have loans that are available for an investor. We have loans that are available for jumbo 20% down loans. There's a lot of different loan products that are available, as I said, that are very unique, that have different guideline requirements for them. So the most important thing really is to pair up with your real estate partner as well as your mortgage loan officer so we can all cross-reference that information to get you your best foot forward when you're purchasing a house. That's going to be one of the most important things to look for. The last thing that I want to mention today is the importance of making sure you understand where interest rates are at today, where the anticipated interest rates will be in 6 months, and where the anticipated interest rates will be a year from now. Because if your thought process is, I'm going to wait until next year when the bubble bursts, it's very likely the bubble isn't going to burst. And what you want to make sure that you're prepared with is if you're looking at an interest rate today that's at or around 3% interest, that interest rate is going to be at or around 3.5% or higher in about 6 months' time, and the anticipated is for it to be over 4% by the end of the year. So that same property that you might have been able to get at price point A is not going to be the same a year from now. So you want to take a look at the comparisons I put together here for you at 3%, 3.5%, and 4%, and you can really see how the difference changes with the payment amount. There isn't a whole lot of difference in what the payment is based on the interest rate adjustment, but what you have to take into consideration is the cost of the house is going to be going up. So please reach out to me if you have any questions. Here's all of my contact information. I'm happy to put together a customized breakdown for you. Happy to go over your options of different down payment and what those payments look like with today's as well as the future anticipated interest rates. Thank you very much for your time.
Well, thank you, Krista. That tells us one thing. The best time to buy real estate was yesterday. The second best time is today. So we got to get out there and buy it. You can't save your money into buying a house. That's why the guaranteed rate has these lower than 20% loans to get you in, and then you can take advantage of the appreciation. You look in your rearview mirror and you go, thank goodness we got our house now. Thanks, guys. We'll see you next time.
Thank you.